to record. Okay. So let's talk about DXY first. As you see, I was looking for a continuation and filling some effigies here for the news, which basically we filled this one, our first effigy, and it just started to move from there. So right now, what's my next plan? I'm looking for another entry when FOMC comes, something like that, probably. And I'm along here in this FVG. So our plan for DXY is continuation toward this order block. So I'm looking for a retest around here, and I'll be looking to short DXY until this low, this 2023 low. So that's basically our plan for higher time frame. But let's get back to our mentorship. So basically the psychology of the market is kind of market sentiment, you know. We started the trending up move here. This was ETF news. When ETF got approved, we dumped, and during this dump, the companies started to buy Bitcoin. This is obvious on chain data. They bought a lot of Bitcoins, and we started to move after that. So this is basically the Q3 concept here, AMD. So it was buying all the way from here. As you can see, it's a range. This one, it's an obvious range, and this was our manipulation. And when we had a buzz here, that's when the expansion comes. So right now, as you know, I was when we started this mentorship, Bitcoin was something over here, some places. I guess, yes, it was something over here. So I was saying that we're gonna experience a distribution for all of these companies that bought their Bitcoin at these lows, and since then it's been only up. And I believe they are going to sell their Bitcoins here and start to move the money from their Bitcoins to other assets, which, as you know, I believe the XRP is going to be one of the assets that's gonna outperform the rest of the market. So why we don't say this range is accumulation? It's a simple range that we're gonna expand up after that. First of all, whenever I post a bearish chart for Bitcoin, people attack me. Either if it was here or here or here or even here, and all this time they just start to attack me and like, why you say something like that? Who said that Bitcoin is going to finish and it's going to drop? We are starting a 4-year cycle, and we are at all-time highs, and every time that we break the all-time high, we go up. So we're gonna study that. First of all, after this video got finished, please go and check to see if Bitcoin is truly having a 4-year cycle or not. And it's different every time. One time it was something around 2.5 years from the bottom to the top, and the other time it was something around 4 years. The next time it was something about 3.5 years. So you can say something that, oh, it's a 4 year cycle, when it's not even four. It only one time we had 4 year cycles. So I'm not convinced, and I believe that's bullshit. That's not going to work. And right now, everybody are just putting their chart example from last bull runs, and they are saying that, okay, whenever we take the all-time high, we are pumping. Why they are turning bullish here at all-time high? Why they was not bullish here? Why they was not bullish here? Why retail people, those who are buying, I mean, at the top, as you can see, it's basically top. So they are bullish here. I mean, like, we might have another move up toward 80K, but that's going to be the end of this move. It won't move something around 300% toward that level. It won't. Why it should move toward that level when retails are buying here? It's not logical. It doesn't make sense, and we all know that market doesn't like you to make profit, doesn't like you to generate profit. So you should be aware of that fact. And every time that things got kind of simple, the answer is obvious. That's probably wrong. That's probably not going to work. Like, the obvious answer right now is that, oh, we took the all-time high, so we're gonna trend up. And I don't think so. I believe this is a local top. We're gonna experience a rejection from this range, from this distribution range, and test some FVGs, test some support zones, and then maybe we can move up again. But I know a lot of people are absolutely on long leverage, so they are exposed. They are exposed to a 10% drop. They are exposed to a 20% drop. They can't even handle a 30% drop. So yeah, that's the market sentiment for Bitcoin. So whenever you see some type of bullish bullshit explanation for market, like, okay, we are having the 4 year cycles. We are at the all-time high. Every time we break the all-time high, it just moons after that. Whenever the answer gets so simple, so obvious, like everybody knows, even my dad knows, even my mom knows, that's probably not going to be the answer, because we know as a fact that market ain't going to let you earn money easily. You have to try for it, you have to work for it, you have to make plans for it. So that's lesson number one. When everybody are on the same page, everybody are afraid of the price to move toward another direction because they are exposed. So basically, this is a green light for you to think differently and try to out trade them. And just for the record, I'm not saying that Bitcoin is done. Bitcoin is a good investment for probably next 5 years, but it doesn't move in a just up only type of thing. As you can see, every single time, I'm waiting for the chart to load. It's not even loaded. Every single time that we came across these levels, we got rejected. So I'm looking for the same thing. I believe that we are going to experience a rejection from Bitcoin. And whenever that I see people that are not interested in buying Bitcoin, like, imagine a drop like this, and I know a lot of people won't buy Bitcoin here. I know as a fact, because I've been trading and I've seen how me as a trader react to the market and how others react to the market. So it's kind of familiar to me to guess and probably assume that people, they are not going to buy Bitcoin here. But I'll be buying Bitcoin here. And For market psychology, as I said, you are a case study. You are a very good case study. Always study yourself, your emotions, how you react to the market, and how that feeling is affecting you, basically. So, as you know, let me delete this. As you know, we long DXY here, and we was expecting a market maker's buy model for it to get completed, and all of this wave, all of this move up, people were shorting DXY. They thought that DXY is going to dump, and we was just longing it all the way. And now, when we took our liquidity from February and we take that high, I saw a lot of bullish posts on DXY targeting this high. And a lot of people were calling for DXY to just hold this FVG and move up from here just to take this liquidity. But as I said, whenever the answer is so obvious and the market is kind of simple, everybody thinks, okay, they find the way, they find the direction of the trade. That's probably wrong. They start flipping bullish on DXY here, we'll start flipping bearish on DXY here. And we was expecting the price to come down to these levels. And this was a place for me that it was kind of 50-50. I wasn't so sure that DXY is going to pump all the way toward these places. I needed confirmation, and the confirmation was basically a break of the structure from this high. And why that high? Why not this one? Because when we started to come down, this high was basically the high that generated this move down. This was so important. So retracing all the way back from where we got rejected and getting this candle out of the way and flipping it, this is a valid boss for me. This is something that is a confirmation for me, and I traded. So basically my break of the structure points are, for example, on this prices, this is the valid break of the structure for me, because this is the candle that got rejected and we made the low here. So for finding your valid base break of the structures, do this, and I promise you it's going to work much better. Flipping the last low, and just whenever the bust happens, just look for the bullish structure. For example, look for an FVG here. I'm sure on lower time frame, something around 50 minutes, there will be a bullish FVG here that got tested, and that's it. So first, if we want to understand how the markets move, there is an easy task for you. Trade markets wrong. Okay, let's say long here and you got a rejection. But when you got a rejection, this formation is basically this candlestick is forming. If somebody long bid DXY here at these tops, they think this is bullish structure. They believe that, okay, just holding these lows is good, so I'm going to hold it. And what happens next is against the people who long DXY here, we just drop. What would happen if you long DXY here? Again, it got dropped. So it's easy to understand how markets work, just trying to make examples, What for the person that, let's say, they long DXY here, how can they be wrong? Putting a stop loss at these places, not here. This is a valid stop loss. This is where you should put your stop loss. You just think with yourself, it's kind of hard for me to explain it because I learned it through my own experiences, and it helped me a lot. It was the most useful thing for me, my trading journey by far, and helped me a lot. So please, first of all, always check yourself, always check your sentiment and how you work and trade when you are feeling some type of certain way. If you are feeling afraid or you are euphoric. So that's on you, and do this by yourself. And I promise you, after probably 3 or 4 weeks of doing that, you will master your own feeling, and it will help you a lot through your execution. And reading the market psychology needs some examples. For example, let's talk about this range, okay? Those people who were bullish on DXY, which we have an FVG here, they believe that we're gonna get supported on this FVG, and they long DXY at this range. And what markets gave them was drop. They got all cleared out. So not too many people were expecting such a drop from DXY, because after taking that high, as I said, everybody felt bullish on DXY. And it's easy to check how other traders are feeling about the market because they post their trades, they share their charts, and it's on Twitter, it's on their Discord. I don't check their Discord, but I do check their Twitter. It matters to me that what others are thinking, because first of all, I want to be on the right side of the direction. I don't want to guess the direction wrong. So what should I do? As a fact, I should counter trade others, because most of the time, most of the people are wrong. That's a fact. That's a fact as a historical fact in everything. It's not just only about the markets, it's about everything. So basically, we look for their opinions. We care what they think, we care what they see, and we look to out trade them most of the time. They are sometimes right, as you know, a lot of traders called this move on the XY. They were bullish, a lot of them, so we didn't flipped bearish here just to counter trade them. We had our own plan, our own invalidations, which was this low, and on any pair you could have traded that. I choose to trade CHF because I believe this was a pretty valid and clean setup. We saw higher lows CHF, unlike unlike DXY, that DXY basically swept this low. So not sweeping the low and making a higher low, it was an SMT, a bullish SMT, showing that CHF is much stronger than DXY, at least at this moment. And we put a stop loss below that low, and we just see how it got expanded. And for USD JPY, I shared the chart. It's actually reaching toward this target. So this is a balance point for this range. As you can see, it's been the most touched place. It got touched here, 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 everywhere. It got touched on this range a lot of times, so it was a valid balance point. And for our balance points, this was the range low that we could have targeted, and this was the range high that we could have targeted. But I was looking for a trendish move. I was looking for a higher high, not only toward this range high target, but toward another target that was much higher, and it's just moving. So please use balance point in your trading with your bias, and use price action to understand how it moves. As you can see, we have an FVG here. This is basically bullish. We have an FVG here as well. So every single time it got supported, and this was a break of the structure. Basically, this was the break of the structure. As I said, Just let me. So this new low got generated from this candle, and this is a break of a structure. We had FVG, as you can see, got tested once during this time, and this was another test from this FVG. It was close to balance point, but it shows the strength by not touching the balance point and basically being above that. This is the kind of a strength that you want to see when you find your balance point. You want to see the lows being made above that and not touching that. This is absolutely bullish for you and shows the strength. So this was the USD JPY trade. Let's get back to Bitcoin. I shared the chart yesterday that this bearish order flow is absolutely scary. We should be scared of that. This is absolutely something bearish. And this was the FVG that got tested that day. A lot of traders went long at these lows because of this back test of that FVG. And all of those traders got stopped with this candle. And I'm sure they are longing here again. I'm absolutely sure. Because they think the low has been made and we are ready to go because they longed here. They are looking to long here as well. People who shorted here, imagine somebody that shorted this range. They don't look to long Bitcoin here. Absolutely, they won't look to long Bitcoin here. They might look to short Bitcoin here, but they won't look to long Bitcoin here. So for this example on Bitcoin, which is happening right now, we see a lot of traders long in Bitcoin here. They got stopped. Again, they are long in Bitcoin here. Guess what? Guess what's going to happen? I'm sure they are going to get stopped again when price is coming back below this low. And I'm looking to long this FUG, as I said. So my own plan is basically this is a bearish order flow as well. So making high lows every single time. And everything is bearish until either we test this FVG, which is a bullish FVG. We want a reaction from that. And there is a lot of lows and liquidity here, so it's logical to test this place. It's not something bad, and I believe it will make a move. It will bounce from this place, not towards all-time high. Who knows? Maybe it does, but it's just simple as scalp. That's what I'm looking for. Or we make a break of a structure. And for this example, what is the break of a structure? This candle basically generated the lows. So taking its high, let's say Bitcoin doing something like that. This is basically bullish, taking that high. And we look for an FVG long or some type of obvious lows that needs to get swept to go low, to go long on Bitcoin. And we target some liquidity or FVG around these places. So basically, that's how you read the psychology of the market by examples. Okay, let's say what happens if people go long here, they put their stop loss here, they got stopped, and when we are right now above their last stop loss, what they are going to do again, they are going to long again, and they are going to put their stop loss here again, and I'm sure they cannot make profits because that's what markets do. Markets won't let you make profits that much. You should be pretty wise with your plans, your executions, your risk management to eventually be profitable. And, and again, for this range, let's say that somebody shorted Bitcoin. Okay, somebody short Bitcoin here. What happens to them? Absolutely nothing. Nothing. They are not feeling anything right now. They might feel a little bit afraid because we are pushing back up. They might close their position at break even. Probably most of them, if we touch their entry, they probably gonna get out of it by break even. So this type of candlestick. It is against longers. It's against bulls. It's not against bears. So during this time, the people that are getting hurt is bulls. They are not bears. So basically, I'm looking for bulls to be wrong again, to get hurt again. That's what you do. You counter trade and out trade the majority of the market that people are wrong, people that are too convinced, people that think everything is obvious and they have the answer. We broke all-time high, we're gonna go again much higher. And guess what? We are just distributing. How many days we are at this range? God knows, man. It's almost, let's say, it's almost close to 2 months. Not fully 2 months, but it's a lot of time that they are thinking that we're gonna go up only because we take the all-time high, which is something bearish. It's not something bullish. And imagine a bear shorting the market during this range and putting the stop loss here. Nothing happens to them. Absolutely nothing. A lot of bears might close their short position every single time that we came up, and their positions probably they closed it for a small loss or for a break even. But what about the bulls? They bought here, 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 they bought everywhere on this chart. Every single candle was a buy signal for bulls because they believed that we're going to leave this range eventually, and this range is going to get broken toward the upside. But what about the bears? Bears got a clear invalidation this high, and we didn't even touch their invalidation. We might touch their entries and they get out of their trades at break evens, but nothing bad happens to them. But every single time that we dropped, we liquidated a lot of bulls. A lot of bulls. Every single time, and a lot of bulls got hurt. A lot of retails got hurt. They get out of their leveraged positions and they didn't make much profits throughout this range at all. So I believe that being a bull at this condition, basically longing the market, needs awareness of our basically crypto community. Everybody are gambling on shitcoins. They are calling for 10x and 20x on their shitcoins. Everybody are calling Bitcoin to go make another all-time high, and if somebody doesn't think like them, that somebody is basically a retard, and they think that that person is stupid as fuck for thinking that way. But I'm sure the bulls can't make money because this whole distribution, bulls didn't make money at all. So I don't believe the market is going to give them a possibility to make money. I don't think that something like that is going to happen because majority should be wrong. Majority should lose their money, not make money. Okay. So every single time that you want to understand the psychology of the market and just just find examples. Okay, let's talk about this place. So we started to drop. We came all the way back down, and we tested this order block, which is around here, as you can see. So let's say somebody longed the market here. Where would they put their stop loss? I'm sure they would put their stop loss here. What happens to them? They get stopped. Okay, so it's our first example by for comparing people that who long the market. Okay, so those who long the market here put their stop loss here. They got stopped. what happens? Price comes back up to their stop loss level. Guess what they are going to do again? They are going to long again. I'm sure they will long again. They were long again, and they will put their stop loss at the low. Sorry. So they will put their stop loss here. Guess what? They got stopped again. But let me just make it a little bit bigger. After they got stopped at this move by this candle, again the price came back up, and guess what? I'm sure again they longed here and put their stop loss at that low, and they got stopped again. So how many times it happened? It happened at least 3 times since this range. If you count all of these moves, like this is one time that they got stopped, they long here again. This is the second time they long again here. This is the fourth time they long again here. Fifth time, sixth time, they got liquidated 6 times. That's a lot of opportunity for people that were looking for shorts. Okay, so we use the psychology of the market to trade our bias for as much as it's valid. For example, when a bear should change his bias during this time. Nothing happened for a bear, and no invalidation got touched for a bear during all of this move down. And the only time that the bear should basically change their view was here, when this break of a structure happened. And why is that basically a valid break of a structure? Because this candle generated this low, and we just came all the way up, made a bullish FVG. We tested the bullish FVG, and again we take these highs. So that's when a bear should have looked for changing his bias on lower time frame and started to basically look for a long. And as you can see, so for this range, let's talk about the bears and what they are going to, what they basically experienced and felt during this time. So for a bull, we know it's kind of obvious. They enjoyed all of this move up. So what for the bears? This one basically got fucked the bulls as well. This was the FVG, got tested, but wasn't able to hold it and turned this FVG to a, just let me use a box. That's much better. So that bullish FVG got respected at first, but after playing with it, we got rejected here, and we come back down all the way to these weeks to test them, and this FVG turned to a bullish support later on when we flipped it. So for example, I am a bull, okay? I'm looking for longs on Bitcoin. What I do, I long this FVG. My TP is first here, and the second TP is going to be that high. So when the price get back to my level of entry, I get out of it at break even or with hitting a stop loss. And when my stop loss got hit, I just wait for the next opportunity. And I see backtest of this FVG, which is basically a bullish FVG, and you can see it's even a BPR as well. That's so clean, man. That's so clean. Shame I don't trade Bitcoin that much, but this is basically pretty beautiful BPR, and I tested here that doji candle that Mama Lee is talking about, testing the BPR doji candle, and making a bearish structure as well. Lower highs, lower lows. So somebody can go short here and to get out of the market here at that low. But let's get back to our psychology part of the talk. So the bull is longing here, and they get stopped here. The price comes back up to their entries. They go long again here. They put their stop loss here. They get fucked. So price comes back up again to their previous stop loss, and they long Bitcoin here, and they put their stop loss below these lows. As you can see, these lows are very juicy. 1, 2, 3, 4, 5 higher lows, and this is basically liquidity. They put their stop loss here again, they get out, and that's how market plays with their emotion. Just find examples, okay? Just try to read markets. Let's go into the past. So we see a beautiful trend. It's a strong, so strong that none of these FVGs got tested. Something that I talked about yesterday. That's when you realize how bullish your trend is, how strong your trend is, by not testing the FVGs. So none of the FVGs got tested. We knew and we know right now that when the FVGs doesn't get tested, this is a bearish trend, okay? So what happens next? A lot of people that miss this volatile move, this is straight up, no backtest, nothing. They go short on this candle. As you can see, it's pretty volatile rejection. It got rejected from, I don't know how many. That's something around 5K. 5K of rejection on 1 hour chart, on 1 hour candle. That's a lot of volatility. So a lot of people that missed all of this move up by seeing the 5K rejection on 1 hour, they go short market here. And they will put their stop loss above that. So, but what we do and what we knew is that, okay, it's a bearish trend. Now, if VG got tested, it's strong. So I look forward to longing any other FVGs above this place to get tested. It got tested once, it got tested twice. Even these FVGs got tested. These FVGs got tested. Even this FVG got tested. Every single FVG that got tested after that has been getting respected. They generated the move up. So you can see a lot of FVGs being tested here, and all of them been working very nice. So what happens to the people that who shorted the market here? They got stopped. Guess what? When markets reject and came back to their entry, to those people who shorted all this move, when market get back to their entry and gets below their previous stop loss, they will go and short again. A lot of bears were shorting Bitcoin here, looking for fast rejection. Probably even I was shorting Bitcoin there. I'm not sure. Or maybe I called this one. I get out there. I don't remember that well. But when market gets back to their levels, that we know that they shorted these levels, and again we are here, what they are going to do again, they will short again. And where would they put their stop loss? They would put their stop loss here. What happens? Every single bullish FVG got respected, and we moved up. Even this one got respected, and we take their stop loss. Again, price comes back down. What happens? They go short again, and they put their stop loss here. What happens? Market take their stop loss again. Again, that's unbelievable, honestly. when these candles happen, they see this rejection as a BART, and they think Bitcoin is going to go down again. They put their stop loss here, they go short here because it's back at their entries, and they got stopped again. So this is when they got, when they didn't short markets again. I'm sure a lot of people didn't short markets and Bitcoin again over there. And that's when the bulls were in charge. Okay. So after, I don't know how many attempts, like say this was the first attempt, second, third, fourth, after 8 or 9 times of attempt, psychology of market reverses and it's favoring towards bearish, towards bear side. But before that, it was for bulls to make money. And that's how you trade psychology of the market. You trade it over and over and over again until it changes. That's probably, I don't know, if somebody was long in Bitcoin here, they could have long it 9 times and make money before getting stopped once here and changing their bias. So this is how you read psychology of market, by examples. First of all, you are a case study, a study yourself, and second of all, uh, studying the charts and examples, looking for basically people. Let's say it's imaginary, okay? Let's imagine some people that short here, and let's imagine some people that longs here. What they do, what is the thing that they are going to do? And that's how you get to understand the psychology of the market. And each asset works in different way. Forex markets work in totally different way compared to Bitcoin. And because I've seen a lot of fractals between Bitcoin and Euro that they work eventually different. Bitcoin going to pump after that fractal, that's absolutely the same fractal. But for example, Euro is going to dump when that fractal is playing. So each asset, each market got its own different type of psychology. Remember that use other people as your sentiment, what they are thinking, how they are acting, and use that for your own knowledge to understand what the majority thinks about the market and outrate the majority always. So that's very important. Majority of people are always wrong. They might not be wrong right now, but they will be wrong eventually. So that's it for the psychology. And for, let me just explain market maker pretty fast. Markets moves in waves, okay? So when you are seeing a chart like that on your weekly, something like this, when you are seeing this, always think about something like that. That's everything about market maker, okay? So on chart, you are only seeing one thing. On chart, you are only seeing this. A lot of people might think that, okay, we might range and continue dropping, but your job as a trader is to look toward the future. What are the possibilities of doing something like that? Is it even possible or not? So a lot of people use past market data to trade the markets. Like they use this FVG, they use this POI, they use their, I don't know, a lot of things. They use this order block to get rejected again. These are related to past, okay? But what market maker models are about, in my opinion, is about seeing the future, seeing something that is not on the chart yet. But we know how to read that, okay? Because we know at the start of a trend, the FVGs doesn't get tested. But as we are getting lower toward the end of our trend, the FVGs are going to get tested a lot of time and they are getting filled a lot of times. So that's when we look for something like that in future. it's not about past. There is nothing in the past history of the market, it's past price action of the market to tell you that we are going to experience something like that. But it's about you and being open-minded, being able to understand that we are at the end of our trend or we are at the beginning of our trend, and basically trading this. And let's say chart is at this price. So right now you have an FEG here that didn't got tested, only one FEG here that got tested. Again, price pumps. You have an FEG here that didn't got tested. So basically it's showing you, okay, we are moving toward the upside. We are making higher lows, higher highs, and we are strong because we are not testing our first initial FEGs. We are not testing a lot of FEGs. So what we do at moments like that, we target this high, we wait, and whenever we take that high, we get out of that. Same thing happens with DXY, with a lot of markets, especially in Forex. They absolutely move in wavish structure that wave is like that or like that. They are not on a trend. They don't do this type of stuff under 1 hour or 4 hour. They might do this on monthly, but as a day trader, you will see a lot of market maker models on your charts, a lot of them on different time frames, but not all of them are valid. Let's say, for example, I told you that this could be market maker sell model, but we didn't trade it. We didn't trade it. A lot of people might actually trade that, but we wasn't looking for that. As well, that we knew that this is a market maker buy model and we traded that. So it's up to you, first of all, and second of all, it's about future. You can see market maker sell model or buy model in past price action. There is not too many things about that in past price action that tell you that, okay, we're gonna make this model completed, rather than something that you should basically see in the future of price action. So a good trader use past price action data to trade that, but I believe a legendary trader, they trade the future of the price. That's why they are successful. They don't only trade the past things on the chart, and they see the things that are not even developed yet on the chart. And that's what makes the difference between a good trader and a legendary trader. And it needs good eyes, sharp eyes, and nothing is going to help you more than the chart itself to understand the market maker models. So I ask all of you to spend 1 or 2 weeks of your time studying the XY chart, just observing it, not guessing it or trading it or calling for predictions. I just wanted you to look at it because this is a market maker buy model. And that's so small, that's on 1 hour chart, but it's so clean yet. So it needs a lot of sharp eyes, a lot of focus and understanding of the movement of the market to be able to read such a things. And basically, this is a market maker sell model as well. Basically, this whole thing, it loads at here. So that's up to you to find them. Needs practice, needs timing, needs everything. As you see, this was a pretty beautiful market maker sell model. And then we find the buy models. It's all up to you. Spend your time on your charts. The screen time is the most important thing for you. Nobody's going to teach you anything more than the chart itself. And when you observe charts enough, you'll understand the rhythm, the movement, and it will help you a lot. Honestly, just listen to me. I can promise you that it will make a lot of difference in your trading game. And you don't need a lot of trades per week to be profitable. You don't need to catch all the moves to be profitable. You just need some high probability trades. You just need some good setups, good execution, and that's all. So this was for the psychology of the market. I want you to do a homework for me and find basically make examples of psychology of the market the way I just did right now on Bitcoin. And I'm sure after doing this for 5 or 6 times, you will be much easier and you will understand it much easier. So that's your homework. Do it by the end of this week. I want everybody to do this by Saturday. And after that, tomorrow we're going to talk about AMD and this market maker models again, just for more explanation to get to know everything. Okay. So that's it for today. And I'm gonna share the trades that I take on Dragon trades here as well. So I did a lot of them. I shared the CHF one because it was high probability. So we're gonna trade together, but I need you to be more active and you communicate with me. I shouldn't come to you and ask you, what's your question? You should be the one that is asking me the questions all the time. So be more active, please, if you want it to be helpful. And I'm going to answer every single question as much as I know. So that's for today. Wish you a very good day. And if you have any question, please feel free to ask and I'll be here to answer. Goodbye, guys.